Inflation is down, interest rates are down, the stock market's been going up, and enters the Fed. The empire strikes back. Go ahead and hit the subscribe button to stay on top of all of the Huntsville, Alabama real estate news. So the Fed's at it again. They've raised the overnight rates to a target range of between 4.25% to 4.5%, which represents a 0.5% increase, which is down from the previous increases. They've been raising them at 3.25 points for the last 4 meetings. That is still the highest rate increase that the Fed's had in over 22 years. Typically, they haven't raised rates more than 1/4 point. So we are still in unprecedented times with the Fed's interest rate moves. The Fed also offered guidance. Their new target rate is between the 5 and 5.25% rate, which is still another 3/4 points from where we're at today. That's about a 0.5 point higher than the Fed had previously predicted and much higher than they gave guidance to earlier this year. So most Fed economists are now saying this is likely, the increase are likely to continue throughout 2023 with interest rate decreases not happening until 2024 with a target rate of 4.1% in that 2024 timeframe. So why is the Fed doing this? They're doing this because their inflation goal is 2% and the numbers just came in at 7.1%. They're a little bit at odds with the general market. The market took 7.1% as a good sign because it's down drastically from the previous month where it was at 7.6% and down 2% from back in June where it was 9.1%. So the thinking on Wall Street is that we're making good progress with a 2% decline in 5 months, and a lot of these rate hikes take time to get effect into the marketplace. And so the Fed's not really giving the time for the market to react, and the market's already come down 2%. And so there's a lot of fear out there that the Fed is overreacting and being too bullish with their rate hikes and may slow down the economy too much. The Fed also offered guidance that they're predicting a 0.5% GDP growth in 2023, which is just slightly above recession levels. I don't think we can put a lot of stock in that because the Fed has not predicted many things accurately this year. First of all, they said inflation was going to be transitory. They also gave different guidance earlier on the year in terms of how many rate increases they were going to have this year and next year. And so the Fed's track record has not been very accurate this year, so I wouldn't put a lot of guidance into that GDP growth number, and I would predict that we will be in a recession in 2023. The bottom line is going to take time. The velocity of rate increases that we're experiencing from the Fed is going to experience a lag effect, and we just don't know what that lag effect is, and the Fed doesn't even know because they've never done it at this rate before. Number two is they're also doing quantitative tightening, meaning as mortgage bonds are falling off, they're not renewing them, which is putting upward pressure on interest rates. And then the third thing is our government, our politicians have printed so much money into the marketplace that it's going to take time for all of that money to work its way through. So what we did is we printed money while people were out of work and not producing goods. And so we created extra demand when the supply was down. And so that has put a lot of pressure on inflation. So in 2023, expect for interest rates to potentially rise over the next several months. We've had this period of time where interest rates have shrank into the low to mid 6 ranges off of highs of 7. But with all that, there is a silver lining because with this market, there's a lot of sellers, there's a lot of builders that are offering interest rate buy downs or 2-1 rate buy downs. So where rates are at in the 6 ranges, we're seeing people get rates into the 5s, even introductory rates into the 4 range with 2-1 rate buy downs. So still a great opportunity to lock in a good rate in a market that is now more negotiable. So a lot of people are saying, marry that home and date the rate. It's very true in a potential transitory kind of interest rate environment where rates may go up a little bit and then potentially come back down based on what the Fed is saying. So if you're interested in buying or selling a home in 2023, give us a call today at 256-333-MOVE, and we'll be happy to walk you through your particular situation, give you advice on whether this is the right time for you to buy and sell.